Hey everyone, and welcome back. Ready for another deep dive.
Always ready to dig into some interesting numbers.
Today, we're taking a closer look at Macpower CNC Machines Ltd.
Ah, yes, the folks behind those high-precision manufacturing machines.
Exactly. Those computer-controlled marvels that are changing the game in industries all over the place.
Automotive, aerospace, you name it, CNC machines are everywhere.
So let's say you're thinking about investing in Macpower.
Always a good thought experiment.
What jumps out at you first? What makes you want to learn more?
Well, for me, it's always the financials. Show me the numbers.
And we've got some interesting numbers to look at today.
From where, you ask?
We're basing our deep dive on a report from screener.in, and it paints a pretty fascinating picture.
Hit us with the highlights.
First off, their share price, as of December 4th, 2024, stands at $104.09.
Not bad, but what about the growth?
Hold on to your hats. The stock's seen a one-year CAGR of 112%.
Whoa, that's impressive. But we need to understand what's driving that kind of growth.
All right, is it sustainable? What's the story behind the numbers?
Well, the report shows that Macpower has consistently grown their sales over the past 10 years.
Averaging around 19%, right?
You got it. But get this, over the last 3 years, that growth has shot up to 29%.
Something's definitely clicking for them. So what's changed in recent years? Let's break down their performance for the second quarter of fiscal year 2025.
Sounds good to me. Let's get granular.
Their revenue for the September 2024 quarter was a cool 71.10 crores.
And what about earnings? Are they actually making money?
EBITDA earnings before interest, taxes, depreciation, and amortization reached 12.75 crores in the same quarter.
Okay, that's starting to look good.
And their EBITDA margin for Q2 FY25, a healthy 17.93%.
So they're keeping costs in check, which is always a good sign.
Absolutely. And it shows they're making a decent profit on each rupee of sales.
Yeah.
Now let's talk PAT profit after tax.
Hit me with it.
They pulled in 8.3 euro crores in Q2 of FY25.
Solid numbers, but I'm also curious about their trade receivables.
Trade receivables.
Yeah, the money customers owe them. How long does it take Macpower to actually get paid?
Ah, good question. The report doesn't explicitly state trade receivables, does it?
It doesn't, but we can get some insight from the debtor days ratio.
Debtor days. Tell me more.
Well, as of September 2024, it was at 33 days.
So they're waiting about a month to collect payments on average. Is that something to be concerned about?
It's worth keeping an eye on. An increase in debtor days, especially a significant one, could be a red flag.
Meaning?
It might suggest trouble collecting payments or overly generous payment terms, something to investigate further.
Noted. Now, on to something investors always love to talk about. Financial ratios.
The good stuff. Let's start with the price-to-earnings ratio.
Or PE for short. Macpower is sitting at a PE of 49.7. That's pretty high, wouldn't you say?
It is. A high PE like that tells us that investors are optimistic about future earnings growth.
They're willing to pay a premium for that potential, basically.
Precisely. But is that optimism justified? That's the big question.
To figure that out, we'd have to dig into their industry, their competitors, and their growth potential.
Agreed. Context is key when looking at any of these numbers.
Now, what about their debt situation?
The screener report tells us Macpower is almost debt-free.
That's got to be a good thing, right?
Absolutely. It gives them flexibility, especially when economic conditions are uncertain.
So no sleepless nights worrying about loan repayments. What about their interest coverage ratio? Can they handle those interest expenses?
Unfortunately, that specific ratio isn't in this report.
Darn. What about the PA to CFO ratio?
That one's not directly provided either. We'd probably need to look at their full financial statements for those details.
Okay, we'll add those to our list of things to dig into later. Let's move on to some ratios that are highlighted. Macpower has a ROCE, return on capital employed, of 29.7%.
Now that's impressive. ROCE shows us how effectively they're using their capital to generate profits.
The higher the better, right?
You got it. And Macpower's doing pretty well in this area.
They also have a solid ROE, return on equity, of 22.2%. That means they're generating good profits for their shareholders.
Happy shareholders, happy company. And finally, we have asset turnover.
That's about how efficiently they use their assets to generate sales, right?
Exactly. It's not directly given in the report, but we could calculate it using their balance sheet data.
A bit of number crunching never hurt anyone.
And it could give us some valuable insights.
So we've covered a lot of ground, looking at revenue, profitability, debt, and some key financial ratios.
But as with any good deep dive, there's always more to explore.
Stay tuned for part 2. where we'll dive even deeper into these numbers and see what they tell us about Macpower's future prospects.
It's going to be fascinating.
Welcome back to our deep dive into Macpower CNC machines. We've been picking apart their financials and,
Really starting to get a feel for them, right?
yeah, for sure. We've seen some really impressive numbers so far. That revenue growth is hard to ignore.
And those EBITDA margins?
Not to mention that almost debt-free balance sheet. But,
Yeah.
you know,
There are always a few things that need a little closer look.
exactly. Remember that debtor days number?
33 days, right?
Yeah, on average, Macpower is waiting around a month to collect payments from its customers. What do you make of that?
It's definitely something that could tell us a bit more about how they're doing.
How so?
Well, it might be a strategic choice, maybe they're offering longer payment terms.
To attract new business.
Right, especially in a competitive market.
Huh?
But on the other hand, it could also signal,
Potential problems with actually collecting those payments.
yeah, and that could impact their cash flow in the short term. Without more information, it's tough to say for sure.
So another piece of the puzzle to keep in mind.
Definitely. And speaking of things that need more context.
That PE ratio.
Oh, yeah, 49.7. That's still sticking out to me.
Investors are really bullish on Macpower's future.
But that level of optimism, it always comes with some risk.
What do you mean?
Well, if their earnings don't meet those expectations...
The stock price could take a hit.
Exactly. It's that classic high-risk, high-reward situation.
Right, right. And then there's the industry itself to consider. Macpower's operating in a pretty fast-paced environment, wouldn't you say?
Oh, absolutely. The world of manufacturing, especially with CNC machines, it's constantly evolving.
So how adaptable is Macpower to all this change?
That's the key question, right? Can they stay ahead of the curve, keep innovating?
Or will they fall behind?
Exactly. Any potential investor should be thinking about that.
So it's kind of a balancing act here. On the one hand,
Proven track record, strong profits, solid financials.
but on the other hand,
An industry that demands constant adaptation.
it's like how well are they really positioned for the future?
Yeah, and that's what makes evaluating any investment so interesting. It's not just about looking at what they've done in the past.
It's about understanding how they'll handle what's coming next.
And whether they're ready to not just survive, but thrive in this ever-changing environment.
So we've looked at a lot of numbers today. Revenue, EBITDA, all those ratios.
Trying to get a well-rounded view of Macpower.
But before we wrap up, I want to shift gears a bit. Let's think about the people who already own a piece of Macpower, the shareholders.
Okay, interesting perspective. What about them?
What's it like being a Macpower shareholder? What does all this mean for them?
Well, I think that nearly debt-free balance sheet has to be a pretty big plus for shareholders.
Why is that?
Less debt, fewer interest payments. That means more money for things like dividends.
Or reinvesting back into the business.
Exactly. It's a good position to be in.
Right, it sounds like a win-win for everyone involved. But even with a solid track record like this...
There's always some level of risk.
Yeah, exactly. No investment is a sure thing. And with Macpower, some of that risk has to come from the industry itself.
Absolutely. The world of CNC machines, it's not exactly standing still.
Lots of competition, new technologies popping up all the time.
And global economic conditions can throw a wrench in things pretty quickly.
So how can someone thinking about investing in Macpower really assess that risk? What kind of questions should they be asking?
Well, I think one of the big things to consider is their R&D, their research and development pipeline.
Are they investing in staying ahead of the game, basically?
Right. Are they innovating? Because if they're not...
The competition will eat them alive.
Exactly. It's also important to think about their customer base. How diverse is it?
Are they reliant on just a few big clients or a single industry?
Yeah, because if something happens to those key customers or that industry...
You could have a big impact on their business.
Exactly. So you see, it's not just about the snapshot of their financials right now.
It's about understanding how they're positioned for the future.
What are their strategies for dealing with all these challenges? How are they going to capitalize on new opportunities? Those are the questions investors need to be thinking about.
So as we wrap up this deep dive into Macpower, what are the big takeaways here? What should our listeners keep in mind?
Well, I think we can safely say that Macpower has a lot going for it. They've got that strong growth, they're profitable, and they've built a solid financial foundation.
Those revenue numbers, the margins, the low debt, it's all pretty impressive.
But we also want to highlight the importance of going beyond the surface. Don't just look at the numbers in isolation.
Think about the industry, the competition, the future.
Exactly. And hopefully, this deep dive has given our listeners the tools to do just that, to ask the right questions and really understand what's going on with Macpower.
We've explored the financials, those ratios, but we've also stressed the importance of context, critical thinking, understanding the bigger picture.
It's all connected.
And remember, this is just a starting point. We've only scratched the surface here.
There's always more to learn, more to explore.
So keep researching, keep digging into that source material, and most importantly,
Draw your own conclusions. Make those informed investment decisions.
and until next time, happy investing, everyone.